So we're going to be looking at the immediate short term for Bitcoin as it breaks out of this channel resistance. Does that mean that 17,600 is the bottom? I'm going to find that out here in just a second with all of you tuned in. Smash the like button for the YouTube algorithm if you're just now watching this video. But let's talk about Bitcoin right now. And I think the most significant thing we could see here is that we are breaking out from this major resistance. And so what I decided to do is I looked at the previous channel that Bitcoin was in, and this was at the start of the bull market. And this is, the bear market. And when Bitcoin topped out at 69,000, it took the stair steps down, similar to what we've done over the last few months here inside of this channel. And so what happens when Bitcoin starts to consolidate and break out of the channel resistance? Well, let's look at what happened here from the peak to trough, or we can even say the trough to the peak here. When we broke out of this channel, we saw about a 38% jump immediately before any sort of pullback, breaking out of this channel resistance. And what's interesting about what we're currently seeing right now is from trough to peak, it's 31%. But if we were to just throw it up to 38%, you get 24,240. And for those that have been tuned into the Snipers channel for quite some time, you know our major resistance of this range has always been 24,295. That's what we've been expecting as the first upside target for Bitcoin, as long as it held above 20K. Really, it was the 2018 previous all-time high, which we clearly held above it with our monthly candle closing its body above this $20,000 level. So to take this with face value, 20,000 is the support for Bitcoin right now. And we are now breaking out of this downtrend with our current daily candle fully above this channel resistance. We'll also look at Ethereum here, because you can see we're also in a similar channel, and we did the same exact thing here when Ethereum started its bear market. We came down, took stair steps down, and then we broke out of the channel, but Ethereum ended up not really performing as much after breaking out of the channel. And that's expected in a bear market because the Ethereum to Bitcoin chart was selling off at that time. But right now with the Ethereum to Bitcoin chart, you can see here, we actually pumped above 65,000 Satoshis, putting 88,000 Satoshis back on the table. And with the Ethereum merge on September 18th, could we say that we should be buying the hype and selling the news? Well, we're going to talk about that today. It's clear, though, that Ethereum is also facing a major resistance right now. And so there are a couple things that I think are extremely significant for the bullish case and bearish case. And then I'm going to have Josh talk, because I know his charts are looking extremely interesting. And if you guys want a sneak peek of his charts before these live streams, his channel link is in the description below. Remember to subscribe to Josh's channel. One of the best students of Traders Profit Club, and I've known him for over 5 years, one of my best friends, one of the best analysts that I personally know. He keeps things simple, that's for damn sure. So 24,000 on the table. What's also interesting, though, is let's look at the Ethereum CME chart. Over the last 2 days, Ethereum has seen over 20% upside. We came up to fill this CME gap. And the CME gap that Ethereum has already filled, not completely, but partially, and we'll talk about why that's important in just a second, but the same CME gap that Ethereum filled, if Bitcoin were to come and fill the CME gap that it created at that same exact moment, that CME gap is actually all the way up to 28,000. And what's interesting about that is, let's go back to the Bitcoin channel. When we first broke out of this channel, and by the way, a lot of the bears are saying, and we'll talk about this in a second as well, that we're following this fractal where you see pretty much 2 pumps and a failure before further downside. But what if we're following this fractal, and the trough to peak for this complete fractal was around 46%. And so let's say this trough to peak goes around 46%. We're talking 25,749. Question is, does that fill the CME gap? No, but it puts us really close to this CME gap. So I think that here's what we need to monitor in the immediate short term. There's obviously an inflection point, as we talked about yesterday. Before this breakout, we knew something was happening, something and abnormal was happening here. And you can see with candle symmetry so far on the 6 hour, we're holding above this channel resistance. And I'm sure some people might have this line and drawn out in different ways. I was actually able to draw it out using, just this resistance down to this resistance. And, you get slightly different numbers. But the point is, we're testing this channel, we're breaking out of it, and there's low volume. And we always talk about this here. When there's low volume, the path of least resistance is sideways to a little bit higher, even in a bear market. So that's why when we broke out of this initial channel, which is the most similar to what we're doing right now from this bull market, the path of least resistance was still sideways to a little bit higher. And we went all the way down from 33,000 to around 48,000 before we saw further downside. So this is a pattern and a fractal that plays out during a bear market. Could we say that we're seeing the same thing right now? Well, let's put a ghost pattern over this, and let's just look at how similar this is currently looking here from what we're seeing right now. If we were to just take this fractal, we'll take it from the low here. You can see it's a little bit of a slower move. We're not going as fast, which typically will happen close to a bottom. And the reason I say that is, if an asset really did bottom out, just like what happened to Bitcoin, the best example would be 2018 here. And by the way, there are two other channels that we can compare this to, but I'm going to let Josh talk before that. But just notice here that when you start to see the volatility die down and you start to see the moves become a lot slower, that's really, where the bear market takes effect. And that's really the longevity of the bear market versus the intensity. And both are pretty painful, right? Something that's very long could be very painful, and something that happens abruptly could be painful. And so for the bullish case, here's what I want to see. We know for sure when we broke out of this initial channel resistance, there was a very violent breakout. As a matter of fact, percentage-wise, we're talking about 14 to 15% breakout here. This is a daily chart, and right now I wouldn't say we're seeing that type of strength, 8-9%. We're still kind of holding around the channel resistance. So for the bullish case, I think it's quite simple, and I want to hear your thoughts, Josh. But the fact is if we stay here around 20, let's say above 21,000 for too long, that would actually probably be a bearish scenario. If we break back down into this channel, that would be pretty bearish. And we have to look at this fractal here as a potential fractal that's playing out here, just in a different form, where instead of forming these lower highs, we're forming higher highs. And that could be because the price is a lot lower than it was back here, right? So I think for the bullish case, what we want to see more than anything is follow through in the next 24 to 48 hours. To the next 72 hours, we want to see follow through. And there are a couple things that are going to be required for that to happen. Number one is this means we have to get above this 50-day moving average. And what's interesting is if you look at the S&P 500, same price action, we haven't gotten above the 50-day moving average. So one of the things that have to happen in order for this to happen and for us to see this bullish case from this breakout of what we're going to call a Gann line, and I'll let Josh go into that because he's studied Gann analysis. And so the S&P 500 is something we want to monitor because that's probably one puzzle piece that we need to also break above the 50-day moving average to make this a true breakout and not just a bear market relief rally. And so I think in the immediate short term, 24 to 72 hours, we have to see something happen. And so I see we've got a ton of live viewers on. I'm going to let Josh share his screen in 10 seconds. I just want to quickly say we're going to discuss Ethereum in just a second, but more importantly, talk about Bitcoin dominance. Do you want to share your screen, Josh, and show them what you've got on your
screen? Yeah, for sure. Awesome. So how's everybody doing today? Hopefully you're not getting wrecked. Yeah, we found out that that the Zoom kind of messes with the audio a little bit, so I just ordered a new mic for everybody. But yeah, let's take a look real quick, guys, at what we have going on here. Okay, so the first thing I want to talk about is on the monthly. Okay, so let's take a look at the monthly here. Actually, that might be too big of a time frame. Let's go weekly. So, in fact, I guess I'll just show you these two lines while we're at it, while we're at the monthly. Actually, no, let's go weekly because I forgot that's where I drew the lines. Okay, so the first major two lines of resistance I'm looking at is from peak to peak right here, from the very top of the bull market, going all the way down. So I think once we break out to the upside of this specific line, I think the bull market could very well be intact. And what's interesting is with Gann technical analysis, if you do a reverse fan from this peak and you line it up perfectly, you'll see that line that Naeem was talking about. Now, the interesting thing is, I want to just examine this more so you can see this. The interesting thing to note here is that this weekly candle is on a very, very high time frame, this right here. And what we've seen is that only the wick has went above this very critical spider line, right? So the body of this high time frame candle is not able to survive up in this region. And that's how you can tell that you've reached a local top, you know, whenever you see that. Typically these types of wicks. Now on the weekly, it's a little different. Let's go ahead and go down into the daily. Let's go check this out. On the daily, oops, let me go back to this. All right, so now here's something interesting to note. It was so funny because I made a joke to Naeem. I said, once we hit the weekly open, I was like, what if we went long here? Turns out we probably should have kept that position open. I think we actually did go long here and closed it out early because we're like, man, we don't know. Naeem and I wanted to, because we are Bitcoin bulls, we wanted to front run this trade. So we were going long. We actually saw this coming before this happened. And we didn't know it was going to break out, right? We're not mind readers. We're not fortune tellers. But the thing is, though, is we are good at examining all the possibilities. And it was, you know, a pretty obvious move here to go long at this weekly open. And that's what we pretty much did. But we closed out early. And, you know, Naeem doesn't short Bitcoin. I do from time to time, even though I mostly long it. But yeah, you know, I took a short up here and wrote it down, sold it to the spider line, and thank God I did because, you know, you never know. It may not drop anymore. And so the interesting thing is, guys, is look, we're staying within the spider lines perfectly, like the bottoms of the candles. Now, here's the thing, the bodies of the candles. So we broke up above it. We're hovering above it. Now, if we were to have a shift in momentum, you know, the target would put us, like Naeem told us, which would be somewhere around the 25,000 realm. But if we're not able to hold this spider line and we dip below it, and this Gann line doesn't serve as support right here, which, by the way, let's go look at the 6 hour. I just want to show you how perfect this Gann line played out. So here on the 6 hour, the institutional time frame, you'll be able to see that, you know, it acted as resistance for so long, right? This line right here was resistance for so long. And then it finally broke above it and then retested it as support. So, you know, really I am a little bullish right now. Even though it may drop and it may come retest the Gann line before pumping higher. Hell, it may even come down and test the monthly open. We don't know. But one thing I do know is looking at the daily chart, the weekly chart, it is very telling how it was only able to wick above. You know, it was not able to have a body candle, the body of the candle close above this very important spider line, which is basically the top of the channel. So that was very, very interesting for me. Let's go take a look. Also, you know, the 1 hour, it looks like we are dumping a little bit. Maybe I should have held my short, but hey, look, I'd rather it dump without me being in a short and still make money than possibly lose money, right? So that's the way I'm looking at things there. But yeah, we're totally dumping right now. Look at that. I should have left my short open, but I was playing it safe. But yeah, so I could see us retesting this line right here, double bottom, and then bam, continue on to the upside. But if this Gann line doesn't hold, then we are going to most likely test the weekly open, maybe even the monthly open. And it's around this area right here that I would be looking for a long, because we're so close to this yellow line, and which has always served as the bottom throughout time. So once again, if we go to the weekly, I'll just show this real quick, just for anyone that may be new. This yellow line has never not been the bottom, besides March 2020. And yeah, so that's basically all I had to say.
It's so interesting to see the spider lines and the way that weekly candle hasn't been able to hold. So the 22,000 is certainly significant. I think that if we continue to stay below 22,000, that could be a concern. I would say that one thing that we could be quite confident in is taking that long position at the monthly open if we get there, based on the fact that we broke out and we invalidated this fractal so far. It just could be a slightly different version of this fractal. We're forming a higher high instead of a lower high. And that's because it's the trick, trap, and frustrate crew coming in and making sure that they do their job. So, I think at the monthly open, you take a nice long position here, 20,000 with a pretty tight stop loss below the monthly open. I think that would be the next area that I would entertain along. But to be honest with you, I would rather see this pump up even further right now. And I'll tell you why. I think that, despite the margin positions, I've already dollar cost averaged below 20K for Bitcoin. So my spot positions would do very nice as a hedge. If we continue to see upside here, and this is a short-term bottom, I wouldn't mind actually, just so that we can see a little bit more strength, that we get above the 50-day, we hold above the 50-day, and then there's another opportunity that will probably come where we can test 20,000 again. It just might come later down the road. I think that's where patience comes in. So what I would rather see is a push-up, rejection of the 100, and then maybe, bam, that's a great long position here. But I'm with it. I would love to long the monthly open for a first retest at any point. If it happens in the next, I think if it happens in the next 24 to 48 hours, we might want to be a little bit careful, because that could lead to this, So, here's something cool. The Bitcoin against SPY chart actually is something we've been monitoring, and you can see we're above the 200-week moving average right now. I'm going to monitor this for this close, but it's going to take some time, because if we can get back above this 200-week moving average, that's a bottom confirmation. I mean, March of 2020, we wicked below it, no bodies below it. 2018, miners capitulation, we stayed above it. Getting back above it, reclaiming the 200-week, that would also put Bitcoin in a position to reclaim the 200-week. But Bitcoin against the money supply hasn't gotten above the 200-week. Ethereum has gotten above the 200-week. And we were looking at Ethereum expecting this, because, this weekly candle was quite clearly not rejecting the weekly 200-week. So, that led to this move to the upside. But a lot of shorts have been cleared out there, so that's a short squeeze for sure. But that could always translate into something more. Looking at volume, the Ethereum to Bitcoin chart, we knew from the start that this was bullish, because look at this institutional volume that came in, way more than the sell pressure. We haven't even seen that for Bitcoin or Ethereum to the US dollar pairing. So we knew Ethereum to Bitcoin was quite bullish. So that was a good leading indicator and puzzle piece that we caught pretty early on, to assume that not only Ethereum but other altcoins were going to see that rally. But I'm just not liking what I'm seeing here with the altcoins outside of Ethereum. Look at that crazy wick we just saw to the downside. Rejection here of the 50-week moving average. Quite a different picture here. And Ethereum is also rejecting its 50-week moving average right now against Bitcoin, which, for those that are new to the cryptocurrency world, it doesn't matter the altcoin against USD. What matters is the altcoin against Bitcoin. That's where you're going to find the momentum. That's where you're going to find, a lot better leading indicators than looking at it against the US dollar pairing. An inflated currency doesn't make sense. So there weren't many other channels that were similar to what Bitcoin is currently experiencing, other than the one that occurred from that $69,000 local high that you mentioned, Josh. But there were two back here that were a little bit interesting from the 2018 bull market. What was interesting about these channels, though, is we actually did get a break above the channel at one point from the downtrend from the all-time high. And then once we broke above it, we came back down. And see, this is kind of why I don't want to see this break back below the channel. With low momentum, low volume, it could really just lead to a lot more sideways to lower price action. And I think this is not what I'd like to see more than anything, because that could be the start to a really elongated sideways market, which wouldn't be a surprise if the DXY continues to move up, right? So
100%.
Interesting here. Greg says Bitcoin dominance has broke altcoins. Yeah, Bitcoin dominance has been interesting. It's almost telling you that Bitcoin hasn't bottomed yet, because it's just coming down so much right now to the point where it almost could tell you that the bull market's still intact and that altcoins are going to be seeing a whole nother run if Bitcoin moves up. And so I'm going to monitor Bitcoin dominance. I'm not taking too much weight into Bitcoin dominance anymore, because in 2018, it followed the DXY really closely back here, 2018. As soon as the DXY is pumping, Bitcoin dominance pumped. But look at the DXY, it pumped way further, breaking multi-decade highs, but the Bitcoin dominance hasn't followed. So there's a clear decoupling effect in this cycle. And so to me, it says it's not a reliable indicator. It doesn't really matter as much. Maybe the market's matured to the point where Bitcoin isn't the most dominant, and that people actually understand the value of other blockchains and other infrastructure projects. And they're realizing Bitcoin, is just that storage of value. So Bison said, I bought 4 Ethereum last week at 1100 and my finger is on the sell button, but I just can't bring myself to it. It's the macro bottom actually is in, though. Well, I think that your goal with an $1,100 entry is to take profits at some point or another. I would wait. I think that Ethereum does have some room to go, potentially. If we break back below 1277, that's when I would just exit the position and take a smaller profit, because then at that point it opens up the door to 900, and that could really screw you. But what I would say for Ethereum is we haven't fully filled the CME gap yet. CME gap goes to 1165. We have a high of 1650, and then we have a high here of 1633. So it was a partial fill. We filled most of the CME gap, but we didn't fill all of it. But that happened with Bitcoin as well. With this bottom, it didn't fully fill the 1840 CME gap. It got into it, but it didn't fully fill it. So I guess that's a possibility right now for Ethereum, that it has had a local top. But I think Ethereum could have some room, but it wouldn't be a bad idea to take some profits off the table here. In bear market, I think this is clearly a relief rally right now. And so you never want to be betting on catching the bottom, because there's always those 2 weeks. Josh and I always say this, that something happens, right? We call it a black swan event, whatever it might be. And then at that point, you would have wished you took some profits off the table. So maybe take your initial out, keep the profits in, house money, doesn't matter, right? So let's see. Collect some profits if you want to feel better about it, but that's a good buy price, and we have much more upside long term, so I'd hang on to as much as you can. Yeah, you just have to understand your strategy, because you're going to pay short-term capital gains versus long-term capital gains. We can go on and on. Hannah King says DXY is moving back up. Yeah, the DXY doesn't look bearish in the macro. In the smaller time frames, it has been bearish, but in the macro, it's so far and above the major support at 106.56. To me, it looks like it's not the final destination. It could have a short term, just to just relax a little bit. Bison says, I'm finally catching the live stream. Well, if you have any questions for Josh and I, we'd love to take some questions. Josh, do you want to talk about what you're seeing with that GAN line that we were talking about?
Yeah. In fact, I think we covered the GAN line, but there is something else I wanted to share. And, it's basically what I wanted to share was with the DXY, because it's something I'm looking at very closely. And there's specifically, let's go look at the, like a shorter time frame here. So this is the 2 hour on the DXY. And this is a very critical line of resistance for the DXY. And so the moment we break out, let's go check out 15 minutes. So the moment we break to the other side of this trend line for the DXY, I believe there could be some more bullish activity for the DXY. And so this is one thing that I'm monitoring very closely, because as the DXY goes up, Bitcoin goes down. And so what we're seeing right now is potentially a bullish breakout of this very important short-term trend line for the DXY. And maybe that would explain why Bitcoin's tanking right now. But, for all the bulls out there, let's hope the DXY topped out and that it continues to respect this line. But the moment that it breaks to the other side, which you can see it's kind of struggling a little bit, it's getting rejected. That's what I'm looking for, right? So I'm looking at Bitcoin, I see it going down. The DXY, I'm seeing potentially some bullish activity, but it has been going down this whole run right here. So that explains the big pump in Bitcoin. But yeah, look at it. I mean, you can tell right now it's getting rejected pretty much at that exact line. So that's all I wanted to talk about. We talked about the GAN line. Let's just see if there's anything else with Bitcoin we may want to cover. Oh yeah, so the other thing is we're very, very far below the volume weighted average price. And so since we're so far below the volume weighted average price and came up to test it, not even as a resistance, it didn't even make it that far. That tells me, same thing with the spider line, that tells me we could very well see some potential downside in the near future. But once again, breaking through this GAN line is going to be very, very telling. So if it's able to do that, then we could potentially see the weekly open, maybe monthly open, and kind of give everybody else a chance to go long. But the only thing that sketches me out about going long is, once again, that weekly candle close. I mean, it's not able to stay above spider line. So the body of the candle. So that's the only thing that's kind of making me think that this could be a fake out rather than a breakout. If we can see a weekly candle close, or not even close, but if we can just see the body of this weekly candle spend any amount of significant time whatsoever above the spider line, then I will be more bullish. But right now, with the way this weekly candle is looking, and with the way the DXY is looking, I'm not sure how bullish I can be right at this exact point in time from a short-term perspective. Now, from a long-term perspective, of course. So that's what I'm looking at. I'll turn it back over to you.
22,000, significant time above it. I love that statement. If we can see that, and we need to see it in the next 24 to 48 to 72 hours, then we could potentially have a nice bottom on our hands. Doesn't mean a macro bottom, but it means a bottom like the way 33 acted as a bottom here before we ran up all the way to 50K, right? So, I think that's what we're looking for here in the immediate short term. And then I see that Bison talked about altcoins. We wanted to look at altcoins. What are low cap? I'll quickly say this: infrastructure projects are probably where you want to be right now. So Matic, Cardano, Solana, those are always good bets, but I would say have a basket of altcoins. There's many strategies with altcoins. It doesn't take much to make money with altcoins in the long term if you plan to just buy and hold. But across the board, we're seeing a lot of mixed reactions. I mean, some of the meme coins, SHIB down 3% right now. Ethereum US dollar down 4%, but that's expected after 9% up daily candle close. Cardano down 3%. So I think we're certainly seeing the pullback, and this makes sense because here's the thing. Let's look at the S&P 500 real quick. Talking about four-dimensional revolving parts, S&P 500 came up exactly like Bitcoin and failed to test the 50-day moving average, right? You can see we got a rejection, and now we're sitting in the middle of this previous candle body. So for Bitcoin right now, what's an appropriate price? I'd say right around 21,700, where it's currently sitting based on the S&P 500. So that's kind of why I think Josh took a nice short here at 22,500, and it made sense because you were betting that it wasn't going above that 50-day moving average, have that stop loss right above it. So, it all makes sense. Yeah. Well, I think that's it for today. Thank you all for tuning into the channel. Remember to subscribe to Josh's YouTube channel. The link is down below. Josh, we appreciate your wisdom and your knowledge here on the Snipers channel. And it is only a matter of time before this bull market will start. And it may have already started today. Who knows, right? We broke that Gann line. It's extremely significant. We knew we were at an inflection point yesterday. That's why we started the video off with that. And so we appreciate you guys. Smash the like button before you tune out if you guys appreciate and want more of this content. And with that, Josh, once again, thank you so much for your kind wisdom and bringing forth knowledge. It was a pretty fun live stream today.
Well, thank you. I appreciate you having me on. And guys, don't forget to check out Traders Profit Club, and the link is in the description of this YouTube video. Like I said, it's pretty much where I learned everything I know. So make sure to check that out. And thank you, Naeem, for having me on.
Thank you, Josh. Thank you, Snipers, for tuning in. Bison, Greg. We had 2 Gregs on today. And we'll see you guys next time. Snipers.